U.S. stocks are higher. Yields are a little higher. We're seeing the dollar mixed, a little change against the three major currency pairs. I'll go through those three major currency pairs in this video. The euro versus U.S. dollar, dollar versus yen, sterling versus U.S. dollar from a tactical perspective. So let's get started. Looking at the euro versus U.S. dollar on the hourly chart this week, the high prices that we saw here on Tuesday and again on Wednesday stalled right near the 100-day moving average. That's this blue line right here, the overlay blue line on the hourly chart. We did move above it here. We did move above it here, so the buyers had their shot. They didn't get above it, or they got really close to it right here and again right here. This was the last time the price tested that level, and it stalled up right near that level. We moved to the downside. This is the FOMC rate decision, of course, where the Fed had a dissenter, didn't want to cut it all, and also the Fed chair said that they're on no preset course for December. That sent the dollar higher, the euro versus U.S. dollar lower. The low price that we saw on Wednesday did come right down to the low price that we saw the previous week right here. It also defined the low of this swing area through here, which had a number of different swing lows and swing highs going back in time. You outlined some of those levels through here. And in trading on Wednesday, we came right down to that low of that swing area, bounced higher. What I like about the bouncing was a quick one, was that the price on Thursday went right up to the 100-hour moving average. We did get through the 200, but stalled at the 100 and started its rotation back to the downside after testing the 200 right here on this corrective move, which is also another good sign for the sellers, and that gave the go-ahead to push to the downside, push below this level down to our low for the week and the low for the day yesterday, which also happened to be within about 5 pips of this double bottom right through here and this other low right through here between the 115.41 and 115.46. So guess what? This area is now the support target on the downside. We're going to need to get below that level to increase the bearish bias. Now the corrective move to the upside, where do we go? Well, we went right back up to the lows right here and here. Found willing sellers against that level not once but twice in trading here today. So we know now that ceiling is now our risk level for shorts. As long as the price remains below those levels, the bias remains more to the downside. And so that's a trade. Stay to the downside. Get through this area right through here, and if we get through that area, it opens the door for further selling. As you can see, going back to the daily chart, there's really not a lot going back in time if you were to break that level, maybe go down to this low right here, 114.44, and then you look toward this low right here, which happened to test that 100-day moving average near the 113.93 level, 114 level. And then we'll start to look at the 200-day moving average. That 200-day moving average comes in at 113.66. Is at the level right through there. So be aware of that opening to the downside. And so we're sitting on the edge right now for the euro versus U.S. dollar. We'll see if we can push through. Let's take a look at the dollar versus yen next. Look at the hourly chart. And in trading yesterday, the price moved to the upside. Did take the price above this ceiling here. This ceiling was defined more recently by these different highs right through here, and here. This high equaled that high right there. We found willing sellers against it, pushed to the downside. I guess 1, 2, 3, 4 Monday's trade pushed to the downside to our low. We did move below the 200-hour moving average at the lows in trading on both on Wednesday's trade before we saw the Fed decision pushing the price higher. We did correct the lower in trading yesterday, coming down to this swing area through here, swing high, swing low, trade above and below it, but retested right here and also tested the 200-hour moving average. Nice hold right there to give the buyers to go ahead to push higher, and indeed they did, pushing above this ceiling level right here, which is now support for the dollar versus yen. Stay above this area between 153.19 and 153.39 keeps the bias more to the upside for this pair. We can aspire for higher levels, but of course we do have this double top now set by today's high and yesterday's high that needs to get through at 154.437. If we take a look at the daily chart in this currency pair to see where we're at in regard to this price action, these highs back here at 154.74 area is the next key target on the top side that we need to get to and through. If we get above that level, it's really opens the door for further upside in the dollar versus yen. Finally, let's take a look at the sterling versus US dollar. I'll look at the 4-hour chart for this currency pair. Why? Because you see these lows right through here, this low right here, this low right here. This formed a nice little double bottom here for big moves to the upside, big move to the upside. And what do? We came back down to that level in trading last week and found support, actually this week, and found support buyers against that level. Pushed higher, but could not get back above the 200-day moving average, and we saw the rotation to the downside in trading. Yesterday, we moved below that level, extending the range to the downside, extending to 131.15 right here, but then rebounded back to the upside and trading above and below that level and trading here today. But now we are back below this old flow right here at the 131.39. 40 level, and that is now our risk level. As long as the price remains below that level, the bias can remain to the downside for this joint versus US dollar, and we can go lower. Taking a look at the daily chart, if we look at where we're at in regard to that, we're also fell at that 131.40 level. Here's that low, here's that low. That low also happened to correspond with a 38.2% retracement of this move to the upside. So not only was it a nice little floor right through here, but 38.2% retracement. And so now we know that that level is now our risk-defining level for sellers. As long as the price remains below that level, we can aspire toward lower levels, and the 50% retracement level is really, one of the levels that we're going to look toward. Of course, is like the 130 level, and I'm sure like we can also take a look at maybe this high right through here as a level that would work toward. But really the up, this is a breakout to the downside below that 38.2% retracement. As long as the price remains below that level, the bias remains more to the downside. So there you have it. We'll look at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune through trading. Bye-bye now. Happy Halloween.